This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead. With insight on the people, companies, and trends shaping today's complex economy. Plus, global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec. Live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everyone, across Bloomberg platforms, TV, radio, YouTube, Bloomberg Originals. This is Bloomberg Businessweek Daily for this Thursday, February 11th, 2026. Carol Massar, Tim Stenovec. Live
Carol, I have bad news.
What?
It's February 12th.
Yeah. Oh, is it?
Yeah.
Jeez.
That's okay.
Maybe I want to go back to
You
February
had such
11th.
a fun day yesterday. We had such a fun day yesterday that you just want to relive it all again.
Matt Miller makes fun of me. He's like, Massar, you never know what day it is. And I'm just like, I think it's just so much coming at us.
You know what? You know what it is? Is tomorrow's Friday the 13th. You're going to say the thing that you always say on Friday.
Triskaidekaphobia.
And yeah, there we go.
Okay, so it's Friday the 13th Eve. So that means it's February 12th. Thank you, Mr.
Yeah.
Stenovec. All is not really okay with apparently Massar, and all is not okay with Wall Street. First concerns about tech profits, worrying investors. You've got stocks, Bitcoin, silver, bond yields all moving lower on this Thursday. I got to say, it's an interesting tone. It's not like everybody's heading for the exits, but we're definitely bouncing along our lows of the session.
But look at shares of Apple down 5% right now.
Yeah.
That's really weighing on the market. That's the worst day for Apple going back to April 4th of 2025, which is the post-Liberation Day retreat that we saw with stocks. So almost the worst day in a year for that company.
Sounds like it's on your decliners list.
It is now. I've had to change it a lot today because there's a lot happening.
I have to say, finding gainers today, it's, I feel like not necessarily some household names, but we'll get to that much, much later here on our broadcast. Having said that, we do have an eye constantly on the markets, but ahead this hour, we're going to get the latest on today's selling and on that AI scare trade. We're going to do that with Raphael Thuin. He's head of capital market strategies at Tikehau Capital. See what he has to say about the trade, the churn, are they just narratives, or are we seeing a pivotal moment in stocks and maybe a leg down that maybe sticks around for a while?
Also, the president right now speaking at the White House, making some announcements about the EPA, taking questions too. We'll keep our eye on that and bring you any headlines as we do get them. What a week it's been, Carol, in Washington. Key members of the Trump administration going before Congress. The White House dials it back on Minneapolis. Trade agreements are once again up for debate. You saw some Republican defections late yesterday in the House.
Exactly. Some highlights and lowlights, if you will, of the day in Washington or the week in Washington. Hey, Rivian, out with earnings after the closing bell. We're going to be breaking that down. We're going to talk EVs and autonomous driving. We're going to hear from the co-CEO of Waymo, or Ed Ludlow and team, and Caroline Hyde catching up with her. And then also weighing in on kind of the EV and autonomous space, SparkCharge founder and CEO Josh Aviv. So I'm already exhausted, but it is February 12th, everybody.
Okay, well, don't go anywhere, Carol, because Redhead crossing the Bloomberg terminal. Anthropic finalizes a $30 billion funding round at a value of $380 billion. That just crossing the Bloomberg terminal.
And the president saying that they have to make a deal with Iran. That is certainly in the geopolitical concern front, and our relationship with China is very good right now. So, yeah, geopolitics still always front and center. Whew.
Okay.
It is February 12th, though.
It is February 12th.
I finally got it.
Let's send things on over to the Bloomberg Businessweek studio. Nora Melenda is in. She's looking at the markets today. Hey, Nora.
Hey, Tim. Well, it's just about 2:02 here on Wall Street. I'm Nora Melenda. We check markets for you all day long here at Bloomberg. Just looking at that red head again, just crossing the Bloomberg terminal. Anthropic finalizes a $30 billion funding at $380 billion value. Let's take a look at these markets. Tech, the worst performing sector in the S&P 500. We are seeing in the broader market, S&P 500 down more than 1%. NASDAQ down about 1.5%, while the Dow Jones Industrial falls about 1%. We're seeing prices buckling across several asset classes as concern over tech profits and weakness in commodities sent the S&P 500 toward its biggest drop in more than 3 weeks. The 10-year Treasury yield hovering near 4.1%, while the 2-year yield sitting just below 3.5%. We have gold and silver tumbling, traders plowing through money. It plowing money into the perceived safety of treasuries. We have silver sliding to $76 per ounce, gold falling below that $5,000 mark to $49.37. And we also have the VIX, a bit of volatility in the market, pushing toward the 20 handle. In stocks, we're seeing Cisco suffering its worst decline in more than 2 years after giving a weaker than expected forecast for profitability, a sign that higher memory chip prices are taking a toll. And App 11 shares plunging for double-digit losses after the company delivered fourth quarter results and an outlook, both coming in above consensus, but weren't strong enough to assuage recent concerns over AI disruption. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Nora Melinda, and that's a Bloomberg Business Flash.
All right, got it, Nora. Thank you so much. Well, the AI wrecking ball continues to upend stock trading. We just heard from Nora on the trade today. Investors worried about the impact, everything from SaaS companies, financial advice, and wealth managers. That's a trade playing out again today. Real estate service firms, and even another one today in terms of the AI scare, logistics stocks, Tim. And then, of course, we had Cisco Systems. Let's not forget. Shares plunging today as its disappointing outlook for profit margins underscored higher memory chip prices are taking a toll. Yeah. Add it all up, and here we are.
Yeah, this is starting to be a theme. We got Raphael Thuin with us, head of capital market strategies at Tikehau Capital. Close to $60 billion in assets under management as of late last year. He joins us from Paris. Raphael, good to have you back on the program. The AI wrecking ball, as Carol describes it, each day, seemingly a new industry selling off. Logistics, just the latest. Is this oversold? Are investors not understanding what's going on here, or is this warranted?
Well, there is a lot of excesses on the downside, the same way we had excesses on the upside. And clearly, in many of those industries where you can see performance going down sharply on the stock market, there are a lot to do, a lot of opportunities, and yes, a lot of excesses on the downside. That said, we have also to take into account that there is a narrative shift for many of those industries. When you look at the software business, obviously, some maybe financial services companies as well. Clearly, there is a before and an after, let's say 2025, 2026, maybe a before and an after Anthropic. And, the case you could make maybe a year ago about, free cash flow generation, high visibility, identified sources of growth, barriers to entry, sometimes have collapsed. So yes, indeed, some rotation, but some of it is clearly warranted.
All right, so it's not the beginning of a correction in your view as a result of AI and maybe people questioning it?
No, it's clearly more dispersion. Maybe the rising tide will not lift all boats after all, and now you're starting to see some winners and losers. The interesting part maybe about the past few weeks is that clearly the AI losers have lost a ton, and we're seeing that every day, and the correction is extremely sharp. On the other hand, we are not seeing a lot of performance for the AI beneficiaries. And that's probably a question for investors to ask themselves. If you're buying the theory that 2026 could be the year of the acceleration of AI adoption, the year of innovation, the year of, disruptive news coming in and out from those various tech companies, then there is, a positioning to have now where some of those AI beneficiaries are not rallying. A lot of those stocks have derated, and you could argue that there might be an entry point there. At the same time, indeed, playing the rotation away from some of the losers makes sense. So interesting time for investors to assess their strategy.
A company like Apple down 5% today. For a couple of reasons. One is the whole market is lower, but also investors are concerned after the company, or the FTC rather, sent a letter to CEO Tim Cook saying the company could be violating the FTC Act if it misrepresents Apple News or violates its terms of service. That has investors a little concerned. Is today a buying opportunity for some of these names?
What's interesting here is that you are not seeing a big shift in terms of the fundamentals. Like the earnings have been strong, the AI story is on, it's been on for quite a few months now. So it's mostly about sentiment, it's mostly about overcrowdedness, it's mostly about rotation, and in many ways it is healthy. Among those large caps tech, though, the question here is the shift in terms of business models. You went from a business model which was capital light, high top line growth, high margin, and capital light kind of business to a capital heavy business with margin compressing. So this deserves most likely some kind of derating in terms of multiple. The question here is, have we derated enough? Today, if you were to summarize, you're basically paying S&P multiple to get into many of those Max 7 stocks. Is it enough? One could argue we are probably closer to the bottom for many of those stocks.
Raphael, one thing I want to ask you, and we are watching headlines in terms of President Trump. He is making some comments in the White House. He's talking about Gaza. He's talking about Iran, the need for a deal, and some other headlines. I'm just looking here in terms of what he's saying. And I just do wonder, how do you roll in the stuff that we get from the White House specifically, and how do you read through what really matters to investors when it comes to the White House? He talks right now he says it will be very traumatic for Iran if they don't make a deal. He said, there's just some different things here that are coming across. I'm just curious, what do you take to heart that might impact the investment climate when it comes to President Trump? And I just think about there's so much happening geopolitically and the alliances and so on and so forth, which will ultimately impact global economies, including the U.S. economy.
Yeah, this is part of the risk. When you look at the risk factors for the market this year, geopolitics as a whole is clearly a risk factor. And Donald Rumsfeld used to say there are the known unknowns. So call it Taiwan, Ukraine, tariffs, etc. And there are the unknown unknowns, and we might get some more of those in the coming month. So that's a risk factor. That said, we can say that investors have done a pretty good job over the past couple of years focusing on what matters. And what matters at the end of the day for investors is how the macro is going to react. What are the prospects for interest rates and interest rate cuts from the Fed, for instance? What are the prospects for earnings generation? And making sure that none of that noise from the geopolitics will be affecting this global picture. So far, the market has done a pretty good job at, trying to make the difference between the noise and the reality. There is a lot of noise coming for now. Haven't seen yet much impact in terms of earnings and prospects. The one thing to keep in mind, though, if you think of potential impact for the market, what's going to happen with tariffs is clearly a key focus here. It has been toned down a little bit the past few months.
Right.
The market has kind of moved on from the tariff conversation. If tomorrow we were to have some aggressive rhetoric coming back here, or on the contrary, if tariffs were to be dropped with the impact on long-term interest rate potentially, that could disrupt the market.
All right. Really appreciate it. Raphael Thuin, of course, head of capital market strategies over at Tikehau Capital. All right, from what's turned out to be a bit of a tougher week on Wall Street, especially for some sectors, to what some might say has been a crazy week when it comes to the Trump administration. In the past 72 hours alone, members of the president's inner circle making headlines, from U.S. Attorney General Pam Bondi, U.S. Commerce Secretary Howard Lutnick, White House Trade Advisor Peter Navarro, and just this morning, U.S. Border Czar Tom Homan from Minneapolis.
I have proposed, and President Trump has concurred, that this surge operation conclude. A significant drawdown has already been underway this week and will continue through the next week.
USMCA has some significant flaws in it, and it's going to be reevaluated in July.
Ask Merrick Garland over the last 4 years one word about Jeffrey Epstein. How ironic is that? You know why? Because Donald Trump, the Dow right now is over $50,000. I don't know why you're laughing. You're a great stock trader, as I hear, Raskin.
Of these millions and millions of documents, there may be 10 emails connecting me with him. I barely had anything to do with that person. I literally met him 3 times over 14 years with widespread in between.
All right, that last voice, of course, U.S. Commerce Secretary Howard Lutnick. Then you had U.S. Attorney General Pam Bondi. She was up on Capitol Hill yesterday. Lutnick the day before. White House Trade Advisor Peter Navarro joining our surveillance team this morning on air. And then, of course, border czar Tom Homan from Minneapolis this morning. We've been hearing from a lot of the Trump team this week.
Yeah, including the president who just wrapped up remarks at the White House. He said he hasn't spoken to Howard Lutnick about visiting Epstein Island. He also said that the jobs report was amazing in certain ways. I want to bring back to us Bloomberg News White House editor Jordan Fabian. He joins us in the Bloomberg News Washington, D.C. bureau. Jordan, this is just a sample of what has happened so far in Washington this week, and it's only Thursday at this point. Does the president seem like he's distancing himself from his team right now? Does it seem like they're being emissaries in a different way right now? How would you characterize what we just heard?
I would say the White House is doing everything it can to try to tamp down talk about the Jeffrey Epstein story. The irony being that the president, when he ran for office, was harnessing this call from a lot of his supporters and people on the right to release these files, knowing full well that he would be mentioned in them at length, given his prior relationship with Jeffrey Epstein. And so this is a crisis of their own creation, and they're really trying to dig themselves out of it now.
Does it weaken the president's stance among Republicans? And I got to bring it up, Jordan, considering what we saw happen with the House vote yesterday, a rare rebuke of President Trump's policies when it comes to tariffs. And you got to read this. I would assume that Republicans are thinking about their own elections for some of those coming up in November, the midterms.
Yeah, that's a great observation, Carol. They are certainly thinking about their prospects in November, and they are reading all the same polls and also private polls that they are shown by their strategists, showing that this president's approval rating are going in the wrong direction. Most importantly, American voters do not approve of the way that he's handling the economy. And so, what is his signature economic policy? Tariffs. That's an easy way for some of those vulnerable House Republican lawmakers and others who disagree with him on the merits to show some distance with this White House. And both the members of Congress and the White House are going to have to grapple going forward with how this relationship, this delicate dance, is going to have to play out. The president usually isn't one for subtlety. He tweeted out during that vote, if you go against my tariffs, you're going to face primaries. I'm going to come after you. This isn't like a normal White House where you'd be able to show some distance in a midterm election year if the president's unpopular. So it's going to be a tough battle for them.
Hey, Jordan, I want to end with popularity when it comes to policies and immigration. We know that the voting populace feels one way about, certainly feels a certain way about immigration. They don't approve of the way that the president has carried out immigration policy in Minneapolis. We highlighted Tom Homan's comments earlier in the day. Is this a big retreat?
It certainly is. If you looked at what the administration did last year, sending in the National Guard and militarized immigration officers to cities around the country to do these raids, Minneapolis was the high watermark of that, and it didn't end well for them. And you've now seen this immigration issue along with the economy. The two reasons Donald Trump was elected in 2024. These are now albatrosses for the president. And that's why you've seen the political dynamic shift from last year when he basically operated with unfettered access to whatever he wanted to this year where he's facing more resistance, especially from his fellow Republicans in Congress.
All right. Great stuff as always. Jordan, thank you so much. Jordan Fabian, he's Bloomberg News White House editor. You are listening and watching Bloomberg Businessweek Daily. Coming up next, from EVs and autonomous driving and a chat with one of Waymo's co-CEOs. We've got a great roundup coming up.
We do have a great roundup. In the meantime, markets still under pressure today. Tech under pressure. NASDAQ Composite down 1.6%. The S&P 500 down more than 1%. The Dow down 0.9%. It's Bloomberg Businessweek Daily.
It's 2:21 here on Wall Street. I'm Norma Melinda. We check markets for you all day long here at Bloomberg. Now, diving into these markets, we're seeing cross-asset jitters around artificial intelligence, concern over tech profits, and weakness in commodities, sending the S&P 500 toward its biggest drop in more than 3 weeks. The S&P 500 down more than 1%, the NASDAQ down 1.5%, and the Dow Jones Industrial Average down about 0.8%. That yield on the 10-year Treasury sliding near 4.1%, while the policy-sensitive 2-year yield sitting just below about 3.5%. Gold falling below that key $5,000 level, and silver dropping to $76 per ounce. We've got the VIX pushing toward the 20 handle. And in some stocks news, we do see that McDonald's U.S. sales grew at the fastest pace in more than 2 years during the fourth quarter as value meals continue to resonate with cost-conscious diners. The company is looking to regain its reputation by being more affordable, including value meals priced as low as $5. Shares higher than more than 1% right now. Lululemon's facing yet another see-through leggings issue. A version of its pants dubbed Heart Scatter has been called out for being see-through when users are both bending and squatting. This is just weeks after the company was in the hot seat after its Get Low line was called out for similar issues. Shares of Lululemon now falling more than 2.8%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Nora Melinda, and that's a Bloomberg Business Flash.
No comment about those leggings. I'm just going to put it out there. All right, Nora.
This is like what's old is new again, right? This is the Chip Wilson problem, like I said, more than a decade ago.
I got to check. I got a few Lululemon leggings I got to check out there. All right, Rivian, as you know, reports after the closing bell today. Right now, we want to go around the world of technology. So much going on, including how we are all moving around. Everything from EVs, ride services, companies, autonomous vehicles, to that other mega trend. You know, that one that starts with, oh yeah, 2 letters, AI.
Yeah, it's the one that's upending markets right now. On that, just moments ago, news that Anthropic completed a deal to raise $30 billion in funding from investors at a $380 billion valuation. That includes the money raised. It bolsters the AI company as it gains ground on rival OpenAI. Let's bring in Ed Ludlow for our tech roundup. He's Bloomberg tech co-host on Bloomberg TV. He joins us from the San Francisco bureau. Ed, I want to start with this latest raise from Anthropic. I mean, when you think about the 2 biggest names, or among the 2 biggest names, and like independent companies, I don't want to call them startups, but independent LLMs right now, no question it's Anthropic's Claude and OpenAI's ChatGPT. How does this raise change the game, at least when it comes to this horse race?
Yeah, well, will it change the game, and does it adjust positioning on a horse race? The reality is, like what we're talking about is frontier labs that are now at scale. So Anthropic is raising $30 billion. It's a $380 billion valuation, almost sort of double the valuation that it held in its last primary raise. It's probably one where you want to look at who's participating, right? And it is a who's who of institutional investors and the kind of top tier venture capital firms that you would expect when a company gets later stage and is thinking about in the near to medium term going public, right? So GIC, Singapore Sovereign Wealth Fund, Coatue, then you have DE Shaw, Dragoneer, Founders Fund, Peter Thiel's Founders Fund, are called Iconic, MGX from the Middle East, Sequoia Capital, and then the strategics, NVIDIA and Microsoft. All of that signals, you know, deeper ties between the AI industry, but also preparing for life maybe as a public company.
Ed, they're making tons and tons of money, right? Or wait, is that a stupid question? And is it more important to really just understand what Anthropic's secret sauce is here to garner such a valuation?
So, I find Anthropic a very interesting company to cover and speak to in recent years. Revenue run rate was about $9 billion last year. It's climbed to $14 billion. They focused very early on putting the Claude model into product form for enterprises, letting all kinds of companies across software, financial services, healthcare do something tangibly useful. And they were less concerned about the consumer, a la ChatGPT, right? It's not really that equivalent. Now, on the capital side, clearly they're raising capital at a high level, and they'll have compute costs and talent costs. But they've also done things differently to how OpenAI has done, right? So OpenAI is trying to raise this $100 billion round, be directly involved in funding some of its own infrastructure. Anthropic has been very closely aligned with the hyperscalers, both Amazon and with Google Cloud Platform, to basically get access to compute through credits and leasing, have a more, I don't want to call it capital light model, because like there's a lot of capital that they're raising, but it's slightly different how they've gone about it.
You know, the Microsoft portion of this gets my interest. I mean, there was the November announcement about Microsoft and NVIDIA and the Anthropic partnership, but we can't forget that OpenAI has been the recipient of what, $20 billion of many billions of dollars of Microsoft money. I mean, Microsoft is one of OpenAI's largest backers.
Yeah.
How does that
circular
work?
financing.
Yeah, okay,
is it
that's your
circular
answer.
financing? Like there are two memes you can go with. You can go with the one from Always Sunny in Philadelphia, like all the strings, like trying to connect everyone. Or you can go with the Spider-Man meme, where there's like 3 Spider-Men all pointing at each other. And the reason I would go with the latter one is, more recently, Microsoft has looked closer at Anthropic's technology internally, how they use Claude and as underpinnings for existing Microsoft software suites. Microsoft, of course, also built a lot on top of OpenAI and GPT generations. So, that line has become blurred. Initially, the story was very much Anthropic and Amazon AWS. And one area that both of those companies found success together is AWS has a platform called Bedrock, where you can either train model or build on top of existing models. It's like a platform and library. And that was a really good sales channel for Anthropic. Now you see all of the frontier model makers, labs, their models are available in all kinds of places, and it's become much more blurred. This raised participation from NVIDIA and Microsoft, like not surprising, as much probably from NVIDIA's perspective as about supporting an ecosystem as well.
All right, not blurry is both of our love of Waymo, and maybe all three of us. I don't know if that's true, but to be fair and editorially correct, we look into this company, right? Because it's been around for a while. Waymo, I'm talking about, and we're definitely seeing them on the streets there. Some would say it's not perfect, right? There are still some issues to be worked out. You did catch up with one of the co-CEOs. Before we get into some of the interview, what is it important to kind of point out about, when it comes to Waymo, which, as we keep in mind, it's a company that's been around for a long time in terms of development and then finally being on the streets and those of us using it.
So the here and now 2026 is that they're probably going to accelerate on all of the metrics that investors and the general public would judge them by. So right now they're operational commercially 24/7 in 6 US cities. But in 2026, the goal is to expand to 20 cities, some of that 24/7 fully commercial, no one in the driver's seat, some of it for testing and slow launch. And one of those cities will be London. And, there is a lot of talk about competition, right? The reality is that Waymo's scale and its growth is infinitely beyond what Tesla is currently doing, for example, or what Amazon Zoox is doing. And they're now well capitalized, just raised $16 billion. So they got the money to do it. But they just are sort of growing and making good on things that they have, over the 9 years I've been in the Bay, said that they were going to do.
You ready?
I'm ready. What?
Why London and not why London before we get them actually fully fleshed out here in New York? Asking for a friend.
Yeah, no, I wrote my the Hyperdrive column about this. Well, for one, New York has nothing in place for this to happen. There are no rules in place. That's a simple answer. London is a mixed transit city that right now, both at the city level and with the Labour government that's in power, is open-minded to this. Waymo's there. They have several dozen vehicles testing. There are 60 boroughs in London. I grew up in West London in one of those boroughs. They are testing in 32 of them. They're just doing it, and they're hopeful that Parliament will legislate for them to be allowed to launch commercial service by the fall of this year. Or if you're in London, you'd say, autumn, mate. We'll be running Waymos in the autumn, mate, is what they'll be saying. So that's the goal.
Okay, well, let's hear from one of the co-CEOs of Waymo itself. Here's your conversation, or part of your conversation, with co-CEO Tikehau Mawakana.
We are just laser focused on execution. Building Waymo to be financially responsible, operationally excellent, and then make sure we maintain the safety culture. That's what we're really focused on. Having this vote of confidence, as you said, not only from Alphabet, but from our 3 co-leads from this round and from all of the new investors who decided to join our cap table and the existing ones who doubled down on their belief that this is the right opportunity to fund. And so we just feel humbled. But also, there's a lot to do. So we're just really focused on making sure that we can scale, focusing on our 2 first international launches, right, London and Tokyo, and scaling across the United States.
We do not yet have, although there has been progress toward just this week, a federal level framework, set of rules. What do you think the direction of travel is with that? And clearly, if you had to deal with one set of rules and not a city by city, let alone state by state basis or case, you'd be making a bit more progress, I suppose.
Yeah, we think it's really important that there is a federal AV standard. We've been advocating for sort of a safety case-based approach because the technologies are different, and we think that the burden should be on companies to demonstrate why you believe your technology is safe enough. We also think there should be transparency requirements.
And that is Waymo co-CEO Tikehau Mawakawana. Ed, one of the things I want to ask you, what are still some of the questions that you have about Waymo's future?
Yeah, there are challenges, like be under no doubts. And I hope that in the wider interview, please watch the full thing on YouTube and Bloomberg.com. Like, I really appreciate the feedback. They're facing a lot of scrutiny. There are 2 probes currently with the safety regulators because a Waymo vehicle struck a child in Santa Monica. Now, what you need to know about that is that the Waymo system did detect the child, which was behind a large SUV. It was traveling 17 miles per hour. It braked sharply, and when it hit the child, was 6 miles per hour. But it has to confront that. And the answer that they give me is, we're playing ball with the regulators. We're basically saying, let us be a party to the investigation. But when those things happen, the public's perception of the technology is impacted. You're going to have to deal with that. You know the first answer real quick?
Yeah.
I also asked, like, are you going to go public? Because the investors that they are getting in this recent round, same as with Anthropic, right? You don't raise money at that level with those types of people unless you have half an eye of the public markets, because they're kind of like crossover anchor investors. And she was like, we're not really focused on that right now.
Hey, Ed, before we let you go, you speak to RJ Scaringe all the time. Rivian, after the bell today, shares down close to 30% already just this year, after a good year last year. What are you focused on with Rivian?
Yeah, like, the story hasn't really changed. You know, this mass market product, the R2, is coming in the first half of this year, but they're still not profitable. They're still very low volume producer, and all of the shine that came with their big AI announcements at the end of last year, which really supported the stock, it's kind of fallen away. Because at the end of the day, you have to get the basics of building vehicles and selling them. And R2 is supposed to be like the Toyota RAV4 equivalent of the EV market. The problem they have is that there are many automakers with that kind of offering now. And so they got to get going on it. And the street's kind of like, you got to get going on it.
A lot of good stuff.
Ed's busy.
He is always busy, but always a go-to. Ed, thank you so much. Ed Ludlow, of course, Bloomberg Tech co-host, along with Caroline Hyde. You can catch them every Monday through Friday at 11 a.m. Wall Street time. When we come back, we've got another read on the EV space. We've got the founder and CEO of SparkCharge. So we'll see what he has to say, how it compares with what we heard today.
It's 2:40 here on Wall Street. We check markets for you all day long here at Bloomberg. I'm Nora Melinda. Busy day in these markets on this Thursday afternoon. We see the S&P 500 at lower by 0.9%, while the NASDAQ 100 is down 1.4%. And that blue chip Dow Jones Industrial Average lower by 0.8%. We do see fears over tech profits ricocheting through markets. No surprise, information technology, the worst performing sector in the S&P 500. The yield on the benchmark 10-year Treasury dropping to 4.1%, while the policy-sensitive 2-year yield sits just below 3.5%. Gold and silver declining on the day, with the VIX just below the 20 handle. Cisco suffering its worst stock decline since 2023 after giving a weaker than expected forecast for profitability, a sign that higher memory chip prices are taking a toll. And logistics stocks are sinking amid fears over AI disruption, marking it the latest casualty of the AI scare trade. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Nora Melinda, and that's a Bloomberg Business Flash.
All right, Nora, thanks so much. So we just talked about Waymo. We talked about Rivian with our Ed Ludlow. We talked about a lot of stuff. Rivian, of course, coming out after the closing bell. Our next guest has a great vantage point when it comes to the EV space. We welcome back Josh Aviv. He's founder and CEO of SparkCharge, with us from Somerville, Massachusetts. Josh, good to have you back here on Bloomberg. Rivian does report a little bit later on, or Ed Ludlow, just talking about his conversation with the co-CEO of Waymo. There's so much going on when it comes to EVs and the next generation of cars, including EV autonomous vehicles. What metrics, I'm curious, do you watch most to get an idea of what it means for your business specifically when it comes to charging and the infrastructure build out?
Absolutely, and awesome to be back on Bloomberg. Thank you guys for having me. Super excited still about the electric vehicle industry. When I think about what metrics we watch, we want to see number of cars deployed on the road and the amount of energy that we're delivering to those fleets, right? We really believe that the future of electric vehicles here in the United States is going to be primarily driven by fleets that adopt electric vehicles. So we like to see how much energy those fleets are using, and then obviously how many cars deployed on the road are they deploying, and then how are they growing that fleet over time.
Where would somebody see, or where would your fleet, what fleets would be charging in your network right now? We do have increasingly companies investing in this technology. Maybe it's hit a speed bump, maybe it's slowed down in the past couple of years as a result of the change in administration. But what fleets are using your network?
Absolutely. We are servicing everything from autonomous vehicle fleets. We are servicing rideshare fleets, package delivery fleets, you name it. We serve tons of fleets across the United States, especially with us being in every state here in the United States, plus our international expansion into Canada and Mexico.
So what does it mean when you're serving these fleets? So when I go to your website and I see Hertz, I see Zipcar, I see AAA, I see Amazon, I see Uber, I see Kia, like I see all of this. Does that mean that you can serve them? You are serving them? You have deals with them? Help me understand exactly what that means.
Absolutely. So when we say that we are servicing fleets at SparkCharge, we are delivering energy via our mobile power hubs with clean energy or our mobile batteries with our battery technology, basically delivering energy to their site, setting up mobile microgrids that allow them to charge off-grid or in conjunction with the grid. When we think about the limiting factor for fleets that really get in the way of them being able to grow, it's really the infrastructure, right? It's the grid. How much power do I have at my site? How much power do I have at my building? With an array of tools all the way from software down to our batteries, down to our power hubs, we can increase that capacity, allowing them to charge cars quicker and get more vehicles on the road without having to wait 2, 3, 5 years for infrastructure to catch up.
What about waiting for politics to catch up? Lee Zeldin, the EPA administrator, earlier today speaking at the White House said that the EPA action eliminates a forced transition to EVs. We know this administration doesn't feel the same way that the previous administration, for example, felt about a transition to electric vehicles. The sort of Tesla thing that happened last year kind of notwithstanding. But what does that mean for you?
Absolutely. Well, what it means is that really fleets are going to have to make a decision around, do I want to go with a gasoline vehicle or do I want to go with an electric vehicle? I think right now what we're seeing is fleets are adopting more electric vehicles because the cost and the ROI is far lower, right? If you think about it, the cost to drive, maintain, and own an electric vehicle is far lower than the cost to maintain a combustion engine vehicle. So if you're a fleet, you're really looking at it and you're saying, hey, what is the best option for my business? And what we're seeing is more fleets are choosing electric vehicles over combustion vehicles due to the money, right? Due to the fact that, hey, the math works out that this vehicle has a lower cost of ownership. Therefore, I can deploy it, I can make more money on it, and I can grow it and scale it.
You know, your CFO on your website had put out a story, or at least written up just a reminder about the U.S. government's commercial clean vehicle credit, which Section 45W, a game changer for fleet electrification, offering up to $40,000 per vehicle for qualifying clean commercial vehicles over 14,000 pounds. So I'm just curious, but this went away with the big, beautiful bill, the president's, as of September 30th, 2025, for any purchases after that date. Have you seen any pullback as a result of that?
I don't think we've seen too much of a pullback from our perspective, right? I think the fleets that we're servicing, they are committed to EVs. They are committed to growing and scaling with EV. So we really didn't see too much of a pullback from that, at least not from our perspective.
So can I just follow up, because you mentioned about the ROI makes sense for EVs. What is that? What is the math on that you're hearing from your customers, why they continue to spend on EVs?
Absolutely. So when you think about an electric vehicle, right, the maintenance on an electric vehicle is far lower than that of a combustion vehicle, right? So there's not as many moving parts. Really, the thing that you're changing on an electric vehicle, the thing most often is maybe the tires. Whereas with a combustion engine vehicle, there's a host of things that can go wrong. There's a ton of maintenance that goes into keeping that vehicle up and running. When you have an electric vehicle, that maintenance cost goes down. Therefore, the ROI and basically the payback on that vehicle can go way up. And that's really what you've seen not only with fleets, but also with consumers as well. They'll tell you, hey, I didn't have to take this car to the shop every 3 months, right? I didn't have to worry about going in when the engine light came on or getting the oil changed and things like that. With an EV, that total maintenance cost is far lower. And for fleets, that's a big decision maker as it comes to putting a car out on the road. If I don't have to spend a lot of money on maintenance, I can keep my total cost down, I can grow my fleet, and I can have a higher ROI for my business. Josh,
if we were speaking 4 years ago, maybe the conversation would have been, or this question would have been different. But because back then, GM, Ford, companies in Asia were spending big and making big investments in EVs. In the last few months, those investments have been pulled back. Ford and GM have taken billions and billions of dollars in charges on EVs. To you, is this just a hiccup in an ultimate future where within our lifetimes, all new cars sold will be EVs? Or are you rethinking that?
No, I think we've kind of jumped the chasm as it relates to electric vehicles here in the United States and around the world, right? When we think about EV adoption, I think these OEMs are looking at it and they're saying, okay, we launched these vehicles, consumers like these vehicles, but it's going to take time to grow into those vehicles. So I don't think it's, the end all be all. I think it's them just re-strategizing and refocusing and laying out a new timeline as they think Americans will catch up, right? But if we also look at the rest of the world, they're adopting electric vehicles at a very fast pace. And I think that's a good key indicator for what will happen here in America. So I think the OEMs are smart. I think they're doing the right thing. But I think they're now looking at it and saying, okay, maybe it's not next year, maybe it's a couple years, and we're going to roll this out the right way.
It's interesting.
And hopefully change the messaging behind it too, which is this car saves you money, right? I think that's the messaging that should happen, and it probably shouldn't be more of a political message either.
Money often speaks. Well, speaking of politics, we think about a lot, and we ask, Tim and I do, leaders about leading in this kind of environment. One with an administration that pushes back on initiatives like DEI and equality that have become mainstays across corporate cultures. Just got about 35 seconds. What say you about leading in this kind of environment?
Yeah, I think leadership in this environment is still focused on culture, right? I think the businesses that will win will build an amazing culture. They'll have amazing teams that buy into that culture, and they'll lead from the front, right? I think diversity and inclusion is big, and which should be part of every organization. And I think that at SparkCharge, we stand by that, right? I think we stand by our culture, we stand by our team members, and we've seen amazing benefits out of that. We continue to lead, we continue to grow, we continue to be North America's largest mobile off-grid energy and EV company. So we stand by diversity.
We hope you continue to keep coming back on with us as well. Really appreciate it. Josh Aviv, founder and CEO of SparkCharge. We're back in a moment.